So far this month, as we've been watching this tariff war, the Rose Garden announcement unfold and how the market reacted, the popular choices that I heard was China, Europe, and gold. Do you agree with those trades, or do you have something else more interesting?
Sure. No, good morning, and thank you for having me. It seems like this month is going very slow, still in April, since those announcements were made. So I think definitely, I think those points you mentioned, I think the trade investments you mentioned, trends are still intact. So this is basically a structural diversification, in addition to US. So gold obviously is a big diversifier here. You also are diversifying. We are seeing diversifying flows now, broadening in equities. But we also think from a more structural perspective, LATAM, for example, equities or assets are quite interesting because they are a structural winner out of this, significant economic decoupling, which is likely to happen in the quarters and years ahead. So this is a time to spread your bets, diversify as much as possible, but also look at winners. And I think we think that LATAM and some defense sector in Europe, for example, more specifically, can still be a structural winner out of this decoupling we are seeing.
Yeah, so let's pick up on that LATAM angle, something new, and there have been some whispers about it. Is there a specific area or asset class that you like there particularly? Because I would imagine that it is largely driven by the idea of, as you mentioned, deglobalization, decoupling, and some of these countries picking up on some of the supplies that are not meeting the demand.
Exactly. So I think a lot of these countries are commodity-focused countries, and commodities is something which every major bloc is going to need. So whether it's the China bloc, which is starting to form, or whether it's the Europe bloc, which is in progress, as we can see, and then of course the US itself. So I think it can play these three blocks in the medium term. Once I think we see a world of fragmentation, the pace of this deglobalization may slow in the short term, as we are seeing from some of the softening of the stance, but it's not going to reverse the trend, and that's where I think we have to see what these major economies will need on a sustainable basis, and that's commodities.
And do you feel like this is perhaps the right time to get back into the U.S. assets just because some of them have been washed out, or do you see more selling down the road?
So I think we are now seeing more structural or strategic asset allocation kind of concerns starting to be assessed. This shock didn't happen in a vacuum. US has been sucking capital from the rest of the world, at least since the GFC, for good reason, because expected returns in US assets were higher. So we are seeing now a lot of focus on what strategic asset allocation weights on various countries should be. It was much more about country diversification, and US is massively above its long-term averages if you look at the 25-year average, and massively above any other region. So I think some kind of a mean reversion is likely to take place in the next months and quarters ahead.